Hello everyone, this is Alexander Nikolov. Let's take a look at the US stock market and let's start this time with Nasdaq 100, the chart of NDX, hourly chart of Nasdaq 100. And what you can see here is a pattern of lower lows and lower highs right now. So the trend already is on the downside here with today's sharp move lower. After the opening strength, the Nasdaq 100 actually turned lower on the hourly chart. What happened today? The market gapped up higher, rallied to 2300 level, where we actually suggested a short position in our daily analysis, and then the market turned lower. The fact that it closed below, actually not below, but right at yesterday's low, and it's now firmly below the declining 21-hour moving average, and also below the 100-hour moving average that has flattened out, are negative signs, and I expect further weakness in the coming week or so. Let's go to S&P 500. Here the chart is still bullish though, so a rather mixed picture on the US stock market. The chart is bullish. S&P 500 first declined sharply yesterday, moved below the important 1277 level. But as I said, I expected a rally. So as I wrote yesterday in Twitter or on my website, I expected a rally and consolidation that lasts a few more days before the market can actually break lower. And this is exactly what seems to be playing out here. The market rallied, and today actually it remained quite firm, well above yesterday's lows, so and above the 100-hour moving average, and it is still rising, this moving average. So the hourly trend here is still higher. What will make the hourly trend lower is a clear break below yesterday's low near 1271s. I expect this to happen. Why? Because the Nasdaq 100 already broke below. It's not a firm break yet, but today's weakness in Nasdaq 100 is very bearish sign. Usually, when the US stock market is near a turning point, the more important index is Nasdaq compared to S&P 500, and the fact that Nasdaq 100 is underperforming, is actually in downtrend right now on the hourly chart, is a sign that S&P 500 will soon follow through on the downside too. The daily chart though remains in strong uptrend here, and also in strong uptrend, still not very strong actually, but still in uptrend on the Nasdaq 100 chart, and that tells me that the current decline is not going to be a very strong one. But let's see how the decline unfolds. My downside target for Nasdaq 100 is near 1221.84 level, so right here, and then I expect another move higher. While for S&P 500, the most reasonable downside target one can expect is here near 1200, 1180 level. So a quite sharp decline may follow here, but let's see what the market intends to do. It's still too early to speak about the downside targets, considering the fact that actually S&P 500 is still in uptrend, not only on the daily chart but also in the hourly chart as well. Let's move to some of the other indicators that we follow. First, let's take a look at the SPY, S&P 500 divided to Treasury bond ratio, SPY divided to TLT ratio. And what you can see here is a strong uptrend, which means the investors still prefer equities over bonds. And because the trend is quite strong, this is a weekly chart, so it will take several weeks, probably months, for this to change. So right now, I expect that this situation will remain the same in the near future, and the investors will still continue to prefer stocks and ignore bonds more or less. So um, this chart actually tells us that the current downside correction, if it occurs, will most likely be a temporary one, not bringing a huge decline here. The other indicator that we follow is the number of stocks within the S&P 500 index that are above their respective 200-day moving average. And you see now that almost 91% of stocks within S&P 500 are above their respective 200-day moving average. That's clearly an overbought condition, similar to the one that we witnessed in late 2009 and early 2010. And eventually, the market broke lower, sharply lower, in May and June last year. But you see, the market spent several months, 4 or 5 months, staying in this overbought condition before it collapsed. So a similar situation will likely be seen right now. The fact that the market is overbought, that so many stocks are above their 200-day moving averages, um, is of course a sign of overbought market, but it can remain so for quite some time. So, and again, I expect a modest pullback right now, probably between 50 and 100 points in S&P 500, but then most likely we'll see another rally toward the highs of this year. The volatility remains in downtrend on the daily chart, but notice that the last 3 days rally has now brought the volatility, the VIX index, back to the important 80-50 level. We still have not closed above this important level, but it appears that the volatility is turning higher, so that should be negative for the stock market for the short term. And finally, gold stocks. Gold stocks usually leading factor, leading indicator. They usually break earlier before the market, and this time they broke lower. Actually, they topped out in early December 2010 and declined sharply since then. And right now they are at a very critical juncture. Um, you remember they broke in September, last September. They broke above an important resistance near 54 level, rallied strongly, but now they have declined all the way down to this resistance level. And today they closed slightly below this resistance level. Also notice the prices are currently well below the 21-day, 100-day moving averages, and right at 200-day moving average, and right at this long-term trend line. So if the gold stocks are to remain in an uptrend here and to keep this breakout valid, they should rally from here. No further downside is allowed. If, however, they continue to slide down, then that could be a very, very negative picture for gold stocks and probably for the entire stock market as a whole. So going back to the chart of S&P 500, um, this is the hourly chart. Again, the trend here is still on the upside, but the fact that the Nasdaq 100 is breaking lower right now is a sign that the market has likely topped out. And notice this top occurred on a very good news, the news from Apple. The market rallied at the open and then sold off sharply. This is typical when the market forms a top. So exactly as one would expect, the market topped out on very good news this time from Apple and sold off hard. So that's all for today. I'm turning bearish for the US stock market, and I hope you have a nice and safe weekend. I'll be talking to you later.